Really fun fact about the market. Gasoline seems to have hit peak at the same time, roughly, as the NASDAQ and S&P 500 hit bottom. Interesting thing to pay attention to. Much like that coupon code on Building Your Wealth expiring on the 28th. Take advantage of that 50% off, and I'll see you there.
Hey everyone, me Kevin here. It is July 25th, which you know what that means. We got lots of things to talk about for Catalyst coming up this week, including JPAL and, of course, coupon expiration on the 28th. We get another big hit in the price. So make sure to join those programs on Building Your Wealth before that expiration. Okay, folks, let's talk about this. So the first big thing that we really have to focus on this week is absolutely earnings. And here's what people are looking for and markets are looking for. Anything that indicates weaker consumer demand. Apple, for example, just put their cell phones on sale in China because of devastating consumer demand for smartphones in China. We've already seen smartphone sales are down 9% globally in the second quarter. That's at least based on some analytic firms. And so anything that indicates weaker consumer demand is creating a concern. For example, this morning also, we had Squarespace, the website hosting company and building company, the drag and drop company. They slightly missed and they revised down their expected earnings for Q3 by only about 1.5%. It was super nominal. Stock fell like 12 to 14% immediately. Why? Because people are looking for where is the strong consumer. At the beginning of the year, people are like, get out. Well, I mean, I was one of the folks saying get out of consumer discretionaries. That was like an easy play. But a lot of folks decided to YOLO it into consumer staples. But a lot of consumer staples still got whacked. I mean, you look at like Walmart or even the staple aspect of Costco or Target. Although Costco's come back a little bit. Nowhere near what we thought it was going to do, though. It's shocking. So you got to be really careful. Instead, what the market is really doing is they're parsing out and saying, okay, look, Walmart inventory is going up, weaker consumer here. Don't care if it's a staple or discretionary, not going to perform as well. So when we have companies reporting this week, like Microsoft, Google, Visa, Coca-Cola, McDonald's, UPS, GM, Facebook, Qualcomm, Shopify, Spotify, Apple, Amazon, Roku, Sony, and Ford. I guarantee you in all of these, people are going to be looking for a strong consumer. By the way, do you want to be super and get earnings transcripts like right away? Check out metkevin.com/seekingalpha and not only get their analysis, but get earnings transcripts right away, and you can get their premium subscription for 50% off. Great platform for not only future projections on data and financials for companies, but a lot of insightful articles and those frickin' earnings transcripts, which I love downloading and then doing a search for inside those articles for keywords like demand and recession and consumer. It's a great way to stay in tune and in touch with the market. metkevin.com/seekingalpha. In fact, this is exactly why I put the vast majority of my personal position over the last few months of dips that we've had here into Tesla, because I expect markets to look for companies that have extremely exceptional demand, and the company that has exceptional demand and told us about exceptional demand is Tesla. Now, of course, there were issues with the Shanghai shutdowns, and Elon Musk gave us a very fair warning. He goes, look, we are selling Bitcoin to raise cash because if China keeps us locked down for another 6 months, we're going to need it. So he was very smart to do that and prepared. And even in their last 10Q, which came out this morning, they told us, hey, look, we should be good with our cash position to where we don't have to raise money as long as the macroeconomic situation doesn't deteriorate all of a sudden substantially, or essentially Shanghai locks a Tesla down. That would be terrible again. The city of Shanghai, China locks Giga Shanghai down again. That would be terrible. But Tesla did also tell us that, hey, we are now raising how much we think we're going to spend on capital expenses like labor costs at the factories, materials, inflationary costs, freight, whatever, by about $1 billion more than expected in 2022. They were expecting to spend another $5 to $7 billion in CapEx for the rest of the year. Now they're actually revising that up to 6 to 8. Again, that just came out in the 10Q this morning. And the stock doesn't care. The stock's actually turning green. Why? It's because of a strong consumer. That's what investors are looking for. That's what Wall Street is looking for right now. I'm convinced of that. And that's why when I'm picking companies to invest in, I'm picking companies where the companies are proving the consumer is strong. This, in my opinion, is exactly why Enphase is kicking butt and it's positive year to date, is because they are an earnings report that anybody can read and look at and go, damn, the consumer is strong. Now, is that potentially going to slow down if people think that household or home prices are going to slow down? Yeah, entirely. But we have not seen that yet. And if anything, we've seen 10-year treasuries come off peak. I'm actually long on some treasuries right now because I think there's a potential for treasury yields to continue to tick down a little bit. That's actually going to be great for real estate. So you could actually see the softest landing of all markets in real estate. And you have to watch this very, very carefully because you don't want to miss the opportunity to buy, which we'll be doing a lot of, especially with the Series A coming up, combination of real estate investing and SaaS. You can go to metkevin.com/Series A to sign up to learn more about that. And of course, course members will have first shot at investing in that. And we might even close it down so that only course members end up investing. Depending on how the first 30 days go. So we'll see. So the next thing that we want to pay attention to really corresponds to these earnings here, and it's that household net worth deterioration is likely to continue. And why this matters is really because you've got this situation in the macro economy right now where inflation is outpacing people's wages, but most people compared to 2019 are a lot richer today than they were in 19, and we still have a lingering feeling of like we want to keep spending. So you've got two things, right? Even though wealth has come down from November, like peak to where we are now, people's wealth, generally people who have invested, is lower than what it was in November. People are still wealthier compared to 2019. So it's not really a surprise that in many areas we're still seeing a very, very strong consumer, which is great. But we do expect that to slow down because wages aren't keeping pace. So at some point, we are going to see more slowdowns at the various different companies. And this is why the forward-looking stock market is punishing companies that are suggesting they have a weak consumer. This is why Snapchat and their ability to convert advertisements or to get more advertisements on their platform with companies, because companies are seeing a weaker consumer, so they're turning off ads. So Snapchat falls 40 to 50%. What was it, on Thursday or Friday or whatever? It all boils down to the consumer. Some people like to say, oh, I don't care about the consumer. We don't have to pay attention to the consumer. Dude, the consumer is everything. That's literally what people care about. Now, Joe Biden and the White House decided to release a statement on a big catalyst that we have coming out this week, which is on July 28th. We expect to get GDP numbers, which could be negative, which means we are technically in a recession. We're not in an officially declared recession, though, until this group of 8 fancy economists at the National Bureau of Economic Research declare that we're in a recession, but that usually takes anywhere between 4 to 14 months after we get this kind of data to declare that we're in a recession, and we could end up being in a actual technical recession, that is negative GDP 2 quarters in a row, but not an economically declared recession because jobs are doing so well. That's entirely possible, but I don't honestly think anybody cares about that. We care about this GDP print coming up on the 28th this week, just the same day the coupon code expires, and you really want to take advantage of that because you'll be getting the best deal. The price always goes up and won't ever be cheaper than today. But anyway, in my opinion, this is Joe Biden basically trying to hedge for the midterm elections to say like, oh crap, yeah, we might be in a technical recession. That's going to create a lot of headlines. Let's try to get ahead of the story by going, don't worry, even if we have 2 quarters of negative GDP in a row, doesn't necessarily mean we're in a recession. It's total BS and total nonsense, and it's kind of lame. It almost makes me think the opposite, that they know it's going to come in negative and they're just trying to get ahead of the news. Kind of weird. But of course, the day before the 28th, which again, that coupon expiration, and keep in mind, you'll get my fundamental analysis in those programs on things like what I'm doing now, which is the great dollar short. I'm shorting the dollar, and that position is straight up since when I initiated that short. I kind of still encourage shorting the dollar right now, but that will be a trade. That will not be a long-term hold. But anyway, and then those are things we talk about in our course member live streams. I do my best to do those regularly while I'm traveling. Sometimes I just can't because of the internet or whatever reasons. But my goal is to always, especially when I'm in the office, make sure we get a lot of good fundamental analysis live streams together, both for real estate and stocks. And you want to be part of those with lifetime access in those programs. So the day before July 28th, though, we have the Fed meeting. And the 27th, we're expecting the Fed to raise rates 75 basis points. They really need to here because even though inflation expectations have come down in the bond market, we're sitting at a 5-year break even right now of 2.58. And we've seen consumer expectations for inflation going out 3 to 5 years rotate down. Even though we've seen that, what's really, really, really important is that the Fed walks the walk now. Because if the Fed goes soft on us, markets could think you're too soft. Inflation expectations go right back up, then we got a nightmare. We need the Fed to talk dirty to us here and punish us. They need to spank us again, okay? They didn't do great last time. I mean, they gave us the 75, but they were still a little soft. Go hard this time. Give us the 75. Talk angrily to us. Tell us about how inflation is still broad-based and you still have a lot more work to do. Fine. That's actually going to be what markets want to hear. Personally, I think as long as they go 75 and they talk strongly and firmly and they keep talking inflation down, we'll actually see inflation rotate down towards the end of the year. And we'll see break evens continue to rotate down. Maybe peak 10-year treasury is behind us, which would be great, especially for the housing market. It would be great for the housing market. It would be great for stocks.
Keep in mind that right now the market is pricing in with a 79.2% certainty of a 75 basis point hike.
And personally, I think you want to be bullish on the second half. Now, I do think all of these earnings coming up, if we have even slight misses or revisions down, you're going to see some pretty volatile moves, but I think those are buying opportunities. You'll be able to buy, so have some cash available. I'm a big fan, in my opinion. It's not a recommendation for you, not financial advice, of course, but I'm a big fan of like 85% in right now and maybe 10 to 15% cash. So we got the Fed, all these earnings coming up. Some folks, by the way, are seeing bullish patterns. I'll throw up a chart here, bullish patterns on the NASDAQ and technology companies. We'll throw this chart up here. And we're seeing a bullish reversal on the chart pattern, which you can see here. And some are saying, hey, maybe it's time for some call options on TQQQ, triple Q, triple NASDAQ. That's very, 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 very risky, but it seems to be an interesting potential play or trade right now. So watch the consumer, folks. Very, very, very critical. Watch these earnings. I will be covering them. I'll be covering the Fed meeting this week. Take advantage of the coupon code. And folks, we'll see you in the next one. Thanks so much. Goodbye.